Hey everybody, welcome to the channel. Soil here, and today I'm going to show you 4 pullback trading strategies that help you discover high probability trading opportunities. I'm going to explain how you can trade pullbacks by the help of these strategies and what important points you must pay attention when using these trading strategies in practice. First, let's see what a pullback is. Pullback is a temporary pause or drop in the price. For example, in an uptrend, after reaching a top, a pullback happens before continuation of the uptrend and reaching to higher top. Having price waves like this is the natural characteristic of all financial markets, whether the market is trending or not trending, and you'll never see the price moving like a straight line. So when a pullback happens, it's a good opportunity to enter in the direction of the overall movement or trend, and this provides you a better entry price. In other words, the lowest price possible to enter in the direction of the market with minimum amount of risk. The pullback is usually short, just a few sessions, and you must be careful of not trading pullbacks early, because in case that it turns out to be a reversal like here, as you can see, you made a wrong decision. So you must have some strategies to determine if it's really a pullback and the price is going to turn in the direction of the overall movement or trend. The first strategy I want to explain is breakout pullback strategy. If you don't know what a breakout is or how they are traded, I have a video that I completely explained breakout trading strategy, and I recommend you to watch it later, because breakouts and trading based on them is one of the important aspects of technical analysis, specifically price action analysis. Alright, getting back to our chart here, you can see that the price is in a trading range, and at this point we got a breakout and the price broke the support level. When the price breaks out of a consolidation and pass a defined support or resistance level, it's very common to have a pullback. As you can see, the price turns and retests the broken level. This is a pullback and gives you the opportunity of entering a high probability trade in the direction of the breakout and lower risk of getting caught in false breakout. Now you may ask when we must enter a trade when a pullback happens, because it may not be a real pullback and it turns out to be a false breakout and the price again goes back to the consolidation period. So you need some signs that prove end of this pullback and the price is moving in the direction of the breakout. At this point, taking a decision depends on what kinds of a trader you are. For aggressive traders, touching the pullback area, I mean the broken level, is enough for them to accept that this is a pullback, and with the first signs of increased momentum in the direction of the breakout, like a candlestick pattern, increased volume, or using some indicators for measuring volatility and momentum, they enter a trade in the direction of the breakout here at this point. For example, here we have dark cloud cover, which is a bearish candlestick pattern, and it shows selling pressure, and the selling pressure is happening near a resistance level. Pay attention, a broken support level changes role and becomes a resistance level. So it gives us the possibility that the price is going to decline. An aggressive trader enters a short position here at this point, but conservative traders wait until the price goes back in the direction of the breakout and breaks the low or high created by the breakout movement. For example, here in this case, they wait until this low is broken. When this level is broken, they enter a trade. So a conservative trader enters a short position here at this point. This trading entry has higher winning rate in compared to aggressive trading entry, but here your potential gain would be smaller because here you enter later. So the choice of entry point depends on what kinds of a trader you are. The next strategy I want to discuss is trendline pullback strategy. Another situation of market where you can take advantage of pullbacks or trend lines. Actually, a trend without pullback doesn't exist, and that's the pullbacks that enable you to identify trends and draw trend lines. Your trend line is validated when the market pulls back and touches your line or zone for the third time. So from the third point, you have the opportunity of entering a trade in the direction of the trend. This is a high probability trade because you are entering in the direction of the trend, and at the time you're trading, it's the best possible price for entry. So when the price reaches to trend line, which is actually acting as support or resistance level, we expect that the pullback pauses and the price will turn and go in the direction of the overall trend. And we must look for signs that prove this, like forming candlestick patterns, increased volume, or having signs of increased momentum by the help of other indicators and tools. For example, here on this chart, for the third time the price pulls back and touches this line that we draw by the help of these 2 points. So at this point the downtrend is validated and we should look for signs of increased selling pressure to enter a short position. As you can see, we got bearish engulfing pattern which shows increased selling pressure, and also look at the volume which increased significantly. So we enter a short position at this point, and here again the price pulls back to the trend line, and on the touching point of trend line we have dark cloud cover which is a bearish pattern showing increased selling pressure. Also the volume increased, so we can enter a short position here at this point. Please pay attention that in cases that the pullback doesn't stop and the price breaks the trend line after the breakout, we may have a pullback and the price may retest the broken line before going further in the direction of the breakout. That can bring us an opportunity of entering a trade. For example, on our chart, you can see that here the trend line is broken, not strongly, and after that we have a pullback and the price retests the broken level, and after that it continues advancing in the direction of the breakout. This is actually the first strategy I explained, breakout pullback strategy. So with trend lines, this situation can also happen. The third strategy is moving average pullback strategy. Moving averages are one of the most commonly used indicators and very popular among traders. In many situations, moving averages act as support and resistance levels, and when the price is trending in a similar behavior like trend lines, when the price touches the moving average line, it bounces back in the direction of the trend. So by the help of moving averages, exactly like what we had with trend lines, we can discover end of pullback so we can enter a trade in the direction of the trend. For example, here on this chart, we have moving average with length of 30. Here the price was in downtrend. Here you can see that the moving average line is acting like a resistance level, similar to downtrend line. You can see that whenever the price gets close to moving average line, selling pressure increases and the price falls. Here we have a reversal and the price turns to an uptrend, and now you see that the moving average line is acting like support level, similar to an uptrend line, and whenever the price reaches to moving average line, the buying pressure increases and the price advances. So by the help of moving average line, exactly like what we had with trend lines, we can discover end of pullbacks, and by seeing increased momentum, we can enter a trade in the direction of the trend. If you're not familiar with moving averages, I have a complete guide to this and I recommend you to watch it later, because moving averages can be very helpful in trading. And the last strategy I want to explain is Fibonacci pullback strategy. If you're familiar with Fibonacci retracements, so you know that this tool is used for discovering when a pullback possibly ends, which makes this tool naturally ideal for trading pullbacks. For example, here on this chart, you can see that after advancing of the price, from this point, it started to lose strength and it declined. Fibonacci retracement levels are drawn on the chart, and you can clearly see that the price stopped at 50% level and it's moving flat, which gives us the possibility that this is end of the pullback and the price is gonna rise. Here we got bullish engulfing pattern which shows buying pressure, and after that the price advanced with increased volume, as you can see. If you're not familiar with Fibonacci retracements, I have a video on this and I recommend you to watch it later to learn how to use this amazing tool for trading. Please pay attention that you can use these strategies in conjunction with each other. For example, confluence of Fibonacci retracement levels with moving average or with trend lines shows strong support or resistance levels, and this can provide you high probability trade. Here on this chart, as I explained, you can see that the price stopped at 50% level, and also it's on the touching point of moving average line. And if you go back, you can see that here the price was in a trading range. This resistance level is broken here, and as you know, it becomes a support level now, and if we extend it, you can see that the price is also on the touching point of a strong support level. These kinds of confluences give you strong buying or selling signal, so always try to look at charts and analyze them in different ways to find these kinds of excellent opportunities that provide you high probability trade. Alright, that's it. Thank you for watching this video. If you have any question, feel free free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you found any value in this video, please like it, please subscribe to my channel if you haven't already, and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.